Hello, everybody. Welcome back to CNF Talks. Today we have with us Gemma Lawrence-Pardew, Head of Sustainability at the Loan Market Association. Gemma is going to be speaking at our upcoming conference, Making the UK a Global Hub for Transition Finance, which is being held in London on the 10th of October. Gemma, welcome.
Thank you. It's a pleasure to be with you.
It's great to have you with us today. Let's turn to our first question. And the first question, I think, really is to understand the relationship and the involvement of the Loan Market Association in the whole debate over transition finance. Perhaps you could just explain a little bit more about the LMA and your involvement in this subject area.
Yeah, of course. So the Loan Market Association is the trade association for the syndicated loan markets, and our focus is EMEA, so Europe, Middle East, and Africa. And then we have our sister organizations, the LSTA and APAC, who cover the US and Americas, and obviously APAC more broadly. Now, on the sustainability side, which is a journey the LMA only got involved in 2017, so right when the green loans were starting to form, we have always worked collaboratively with our sister organizations in order to maintain a global approach to attempt to provide global coherence, global convergence as far as possible. So from our perspective, where we are now on the transitional journey is we already have our specific sustainability linked loan instrument, which we see as a transitional tool and is something we are constantly reviewing, both for integrity and robustness to ensure that it is aiding the market in getting finance where finance needs to flow. And more recently, we've actually set up a dedicated transition task force to see whether the existing labels or the existing product structures in the market are fit for purpose and are again channeling that finance where the finance needs to flow. It is a very complicated topic, hence why you are running an entire day conference on it, but it is one that is vitally important we get right.
Absolutely so. Thank you for that very helpful introduction. And what do you think that the main barriers are, Gemma, for scaling up transition finance? You know, the sums involved are huge, but in particular, the transition-linked bonds and loans. And how do you think that these barriers can be overcome?
So before we dive into the specific challenges of the labelled instruments, so the transition-linked bonds and loans, I think the first challenge is actually a much more fundamental one, and that is the lack of a globally agreed definition of transition finance. Conflicting views often arise due to differences in approach geographically and where the different jurisdictions are. So are we talking about pre-industrialized economies? Are we talking about industrialized economies? And then obviously between sectors, those which are hard to abate or carbon intensive. And then for us specifically in the loan market, the different borrower or entity types. So you've obviously got the globally huge resource, deep pockets, FTSE 100 companies, all the way down to the SMEs. And it's important that all of them transition. So these are the first sets of barriers that you need to overcome. And then you go into the labelled instruments, where we have a variety of challenges. Number one, probably no shock, greenwashing concerns. And this is even more prevalent in the transition space, again, due to the lack of consensus as to what transition is. We've got competing, or maybe not competing, but differing regulatory regimes. We are currently lacking interoperability in that space. The resources required to access an instrument can be quite costly and also time intensive, depending on where a corporate or an entity is on their sustainability journey. And then there are questionable benefits as to accessing a linked instrument. There are negligible pricing discounts due to overarching accounting rules, such as those under IFRS 9. There are risk retention requirements and so on and so forth. And these are all quite documented. They're not insurmountable. And I do think the instruments can be very powerful, but that doesn't mean we should be blinkered as to the challenges there are. Then if we look specifically on the transition side, there are difficulties in aligning with the often very complex requirements of producing a credible transition strategy. And I think a lot of corporates are just at the beginning of their journey of getting their heads around this. There is the lack of a label. So whilst the sustainability linked loan framework exists, and again, I perceive that to be a transitional instrument, there isn't a definitive transition-linked loan framework. So that's a question we are discussing with our sustainability committee at the moment. Is that specific label needed? My personal views are throwing more labels into the market isn't the most helpful. It's actually the structures which are more important to get right, but we are debating the point. And then finally, and this is more at a public policy level, there is a lack of granular sector and industry specific transition pathways, specifically in Europe and the UK. Obviously, we've seen Japan and some of the regions in ASEAN make amazing strides in that regard, and that's where you're seeing the transition label being applied. So there are quite a few barriers to overcome, but again, I don't think any of these are truly insurmountable.
Well, very much sounds as though we all have our work cut out. You mentioned greenwashing, and obviously that there's been a lot of focus on this issue. How do you, as the LMA, try to ensure the integrity and credibility of sustainability-linked loans?
So for us, we conduct annual reviews of the principles to ensure there's clarity around expectations in the market, as I think it's important to get the language right. And this is really important because obviously when the sustainability loan principles were first launched in 2019, the market didn't have the regulatory frameworks or taxonomies that we see today. I mean, the advances in the sustainability market have been astounding. And so,
Yeah.
therefore, the sustainability-linked loan principles naturally need to adapt. They need to align with these advances seen in information and to ensure that best practices are adhered to. So, annual review of our principles is really important. And then for us around the greenwashing concerns, and again, it's something we are always really strive to adopt. It is absolutely vital that anyone in the market can pick up the sustainability linked principles or equivalents put out by other trade associations and understand the language, because there are often you can find yourself in conversations with others regarding sustainability, regarding transition. You're using the same terms, but you have different meanings to those terms
Yeah.
and you automatically have a mismatch. So that's one thing we really try to promote: clarity around expectations, clarity around language, and that builds on to the final point, which is transparency. I think transparency is absolutely essential, and it's something we really promote amongst our members when using the instruments. If you're going to make a sustainability claim in the market, if a label's being applied, then you should provide transparency around what that sustainability element is. What are the KPIs being set? What are the SPTs being set? Yes, the loan market is a private market. By all means, keep the loan itself and the details there under private. But if you're making a
Yeah.
sustainability claim, that should come with a public disclosure.
Mm. Okay, and turning now to the balance between regulation and the desire not to stifle innovation. How do you see the role of regulation in transition finance? And is there a danger that excessive regulation might stifle innovation, which is clearly much needed in the transition finance field?
Yeah, no, I completely agree on that, and it's very important we get the balance right. I would say my colleague Hannah Banston is much closer to this than me, but from my perspective, the existing regimes, the existing frameworks we currently have in place, they need to be really carefully reviewed to ensure they're fit for purpose for channeling capital into transition activities. And most importantly, they don't have unintended consequences. And an example I would give
Mm,
on this is actually the financing of buildings, which is something we've been looking at. So, under the EU taxonomy, there's no real clear incentive for the refurbishment of existing properties, so for the retrofit, as there's a
mm,
very high ambition level of energy efficiency class A set out in the technical screening criteria. We won't delve in, but given that buildings account for 33% of greenhouse gas emissions globally, and the fact that around 80% of the buildings we have in the EU today, will hopefully still here in 2050, we really need to think about how we're going to retrofit that building, how we can support, how
yeah.
the regulatory regimes can support and incentivize investments into not just the pure green activities, but these vital transition activities. So again, you need to work together. And I would note from talking to our members, it's really difficult for financial institutions to provide innovative funding, so to unproven technologies, unproven transition projects, due to the high risk profile of scaling these investments. So again,
Mm,
maybe not regulatory, but public-private partnerships, absolutely
yeah.
essential. Fiscal incentives could both help de-risk these investments and also
Mm.
make them more attractive to investors. So I think there's quite a lot that can be done in this space, and it's just getting the balance right and the regime right.
Very good. I mean, we've only touched on the tip of the iceberg, if you like, in this discussion today.
Yes.
But we're looking forward to hearing more of your thoughts, Gemma, at the conference itself. Just to remind our viewers, the conference is being held on the 10th of October in London, where Gemma will be speaking and a host of other very good speakers. We'd very much like you to come and join us. More information on the City and Financial website, www.cityandfinancial.com. Just remains for me to say, Gemma, thank you very much indeed for joining us today.
Thank you, and I hope to see many of you on the 10th.